Municipal bond income is an excellent way to add tax-free income in retirement. You may be thinking about buying a municipal bond or two right now to add that tax-free income to your portfolio, and you may have an opportunity to do that at a discount. And you may even be wondering, how does this impact the taxation of the bond? Well, the discount will be taxed at the point in time that you either sell the bond or the bond matures and you receive more than you paid for the bond. If you're buying it at a discount, then you have a very good chance of receiving back more than you paid for it. If the gain is de minimis, so the discount is a de minimis discount, the gain that you receive is going to be taxed at capital gains rates. If, however, the discount is more than that, if it's a deeper discount than that de minimis discount, then the gain will be taxed at ordinary income tax rates. And capital gains tax rates are more favorable than ordinary income tax rates, so the de minimis discount is going to have a better tax impact at the point in time that you either sell the bond or it matures. So what is that de minimis discount? The de minimis discount is 1/4%, so 0.25% per year, per full year from the point in time that you buy the bond until it matures. So for a $1,000 bond, that's $2.50 per year. Now let's look at an example for a minute. I want to just talk about a $10,000 bond that is going to mature in 10 years. Let's say that you buy it today, it's going to mature in 10 years, it's $10,000. The interest income is going to be tax-free. But what if you can buy that bond for $9,800? That's a $200 discount. Well, the de minimis discount for a $10,000 bond maturing in 10 years would be 1/4% per year. So that's $25 per year for 10 years. That's a $250 discount. If your discount is less than that $250, then it's going to be considered de minimis. So if you can buy it for a $200 discount, it is a de minimis discount, and at the point in time that it matures, then the tax on that $200 that you are getting that's over and above what you paid for it, that will be taxed at capital gains tax rates. Let's assume that you're in the 24% tax bracket, and then your capital gains rate is therefore 15%. So 15% of the $200 gain would be $30 of tax due at that time. But what if you're able to buy it at $9,500? That's a $500 discount. That's a much deeper discount, and it exceeds that de minimis discount. So at the point in time that the bond matures and you get back $500 more than you paid for it, you're going to pay ordinary income tax on the $500. And if you're in the 24% tax bracket, then you're going to pay $120 in tax on the $500 gain. Now it is a bigger gain. So apples to apples, if that had been capital gains, if it was not considered de minimis and it was capital gains tax on $500, it would have been $75. 15% of $500 capital gains tax would have been $75. That means that you've paid 60% more in tax because it is a deeper discount. You paid $120 on a $500 gain instead of $75 on a $500 gain. And so that does impact the after-tax income that you're getting from this municipal bond. And you want to be aware of that and think through those numbers and decide for yourself, does that make sense or does that not make sense? As I said earlier, the municipal bond interest can be a very good tax-free interest income to add to your cash flow in retirement, but you want to be aware that the price that you pay for that municipal bond, that price matters to the ultimate taxation when it either matures or you sell it. Now, municipal bond income does have an impact on your Social Security income. I did a video some weeks ago about the taxation of Social Security, so you can look back in my YouTube channel, find that video and watch that if you're not sure about the impact of municipal bond income on how your Social Security is taxed. And hope that will be very helpful to you. If you found that this was useful, then I encourage you to subscribe. Subscribe to this channel because I will be posting more videos each month that will give you some insights and tips and tricks for planning for your retirement, because here at Best Path Advisors, it is our mission to help you be on your best path for retirement.